Outrageous is your tax dollars are helping Wall Street buy up single-family homes. You're subsidizing Wall Street.
Are Wall Street investors quietly dumping homes here in the Bay Area? Because across the country, they're offloading properties at massive discounts. In some cases, 20% below market value. Now, the question is the same thing happening here? And if so, what does that mean for home prices? So you might be thinking, that's just in Atlanta or Florida, right? Not us. But what if I told you that some investors are already cashing out here too? And you might not even realize it. Hey, before I continue, my name is Mac Rogers. I'm a real estate broker here in the Bay Area. Please hit the like and share button and subscribe if you're liking this content. Today, we're diving into what's really going on in the Bay Area housing market and why this could be a big red flag for both buyers and sellers. And stick around to the end because I'm going to give you a breakdown of the latest East Bay housing market update to show you exactly what's happening on the ground. First, let's talk about what's happening across the country. Big corporate landlords, think Invitation Homes, Progress Residential, First Key Homes, they bought up hundreds of thousands of homes over the last decade, especially in places like Atlanta, Florida, and Texas.
Massive private equity firms like Blackstone and Pradium Partners have backed a relatively new breed of homeowner, the corporation. This growing industry buys or builds single-family homes and then rents them out.
And now they're selling fast. How fast? Well, according to a recent Wall Street Journal report, some of these big landlords are selling off their portfolios at discounts of 20% or more.
Wall Street traders are now betting that the U.S. housing market is as much as 35% overvalued.
That's not normal. Wall Street investors are usually ahead of the curve. They don't just dump properties unless they see a reason. And right now, the message is clear. They think home prices in some areas are unsustainable. Take Florida, for example.
Pending home sales are falling in 5 Florida markets faster than any other across the nation.
Sales are slowing, prices are dropping, and institutional investors are pulling back, just like they did before the last market downturn. And it's not just in Florida. Across Georgia, North Carolina, and Texas, these investors own huge pockets of homes. If they all start selling at once, that could mean price declines in those areas, maybe even a domino effect across the market. And here's the craziest part. Right now, these Wall Street firms are actually valuing their home portfolios lower than their stock market prices. Translation, they think home values are overinflated. Recent analysis showed companies like Invitation Homes are trading at a 35% discount to their net asset value. That's a huge red flag. So let me ask you this. Why would these big investors take a loss if they thought prices were going up? Unless, of course, they know something we don't. But what about here? Is Wall Street dumping homes in the Bay Area too?
Welcome back. This is Live Look in downtown San Jose, and tonight's Making It in the Bay report, something that we haven't been able to say in a while. The Bay Area has more homes for sale than most other places in the country.
Short answer, not really, and here's why. Number one, the Bay Area has never been institutional friendly. Unlike places like Atlanta or Dallas, where corporate landlords own entire neighborhoods, the Bay Area has never been a prime target for Wall Street investors. Why? Because running rentals here isn't easy. Think about it. Rent control laws in cities like San Francisco, Oakland, and Berkeley, and pretty much everywhere in the Bay Area, they make it tough for landlords to raise rents. Evictions? Almost impossible.
Forget about it. Forget about it.
Let's not forget some of the highest maintenance costs in the country. Investors don't like uncertainty, and here in the Bay Area, being a landlord isn't exactly predictable. Plus, another thing let's not forget about, home prices here are sky high. The median home price in San Francisco or the Bay Area is over $1 million, leading to price to rent ratio as high as 38%, the highest in the nation. This means buying is significantly more expensive than renting. Compare that to cities like Atlanta or Dallas. In Atlanta, the median home price is just, under $400,000, and with rents averaging around $1,800 per month, it's kind of a no-brainer. This results in a price-to-rent ratio of approximately 16. Dallas has a median home price of about $450,000, and the average rent's around $1,400 per month. leading to a price-to-rent ratio of around 26. In other words, they have better returns over there if they buy and rent it out. In simpler terms, investors in the Bay Area would need to charge exorbitant rents to see returns comparable to those in other regions. But with rent control and tenant protections, that's just not feasible. So when you factor in sky-high property prices, strict regulations, and lower potential returns, it's clear why the Bay Area isn't exactly a landlord's paradise. Now, even though Wall Street never went all in the Bay Area like they did in the Sunbelt states, some investors did buy up homes, especially in Alameda and Contra Costa counties, and even as far as Solano County. Companies like Invitation Homes, Arden Brook, and Tricon American Homes own hundreds of properties in the East Bay. And while they aren't panic selling, they are offloading properties in selective strategic sales. And that brings us to the next big question. For the last few months, inventory in the East Bay has jumped. Not as extreme as in places like Atlanta, but still rising. So why is that a big deal? Because here, supply almost never outpaces demand. When it does, it's a sign that something's shifting. Oakland, Berkeley, and Contra Costa counties, homes are sitting on the market longer than they were last year. Some sellers are lowering their prices to compete. That's not normal, especially in a place like this. So what does all this mean if you're buying or selling right now? For buyers, this could be your chance. If investors keep unloading homes, we could see some deals in certain areas. But just don't expect it to be crashing, like prices of like 20 or 30% lower. For sellers, this is something to watch closely. If investor-owned homes flood the market, it could push prices down in certain areas. But before you panic, we're not back to 2008 levels. The Bay Area is still one of the most desirable housing markets in the country. But again, that doesn't mean we're invincible. And to prove that, let's take a look at the latest East Bay housing market update. Here's the most recent report from David Stark from our association.
Even with more choices, buyers welcome the new year by tapping the brakes a bit. I'm David Stark, and welcome to the East Bay Real Estate Weather Report. Buyers had a lot more choices compared to January 2023. In fact, inventory approached where we were back in 2019. More supply didn't bring down prices. Compared to last January, prices were up and solidly in the 1 million range. How did buyers respond to more choices and higher prices? Compared with last January, sales were down. In fact, it was the slowest January in recent years. Let's see how the new year treated our local markets. 880 Corridor is up first. Homes for sale, up everywhere with big increases in the small communities like Albany, Newark, and Union City. Prices, mostly up. Berkeley and Castro Valley both up more than 20%. Sales, mixed. Fremont and Hayward both down. Newark and Union City both up. West Contra Costa County is next. Homes for sale, mostly up in the big and small communities. Prices, mostly up. El Cerrito up more than 20% at 1.3. Richmond at 670. Sales, mostly down. Panola and Richmond both dropped 25% or more. Now we're in central Contra Costa County. Homes for sale, mostly up. Big increases in Clayton and Martinez. Prices, mostly down. Clayton down 12% in the 860 range. Sales, mixed. Martinez up more than 30%, while Pleasant Hill dropped more than 40%. Next, Lafayette, Moraga, and Orinda. Homes for sale, mostly up. Orinda, 25, almost double. Prices, up everywhere. Lafayette, 2.1 million, up more than 40%. Sales, down. Lafayette dropped more than 60%. We're in the Tri-Valley next. Homes for sale, up everywhere. Dublin, 25 on the market. Pleasanton, 40. Prices, mixed. Dublin at more than 1.8, up more than 25%. Livermore, 1.19, down 5%. Sales, up almost everywhere. Livermore, 31 sold. And finally, we're in the Delta. Homes for sale, up everywhere. Discovery Bay and Pittsburgh, big increases. Prices, mostly down. Pittsburgh, 550, down 12%. Sales, mostly down. Brentwood, 32, down 20%, and Pittsburgh, 26, down more than 40%.
So what does this all tell us? Yes, Inventory is rising. Yes, investors are selling, but home prices are still strong in key markets. Again, if you're buying, this could be your opportunity. If you're selling, pricing it correctly is more important than ever because buyers are very selective right now. And if you want to stay ahead of these market shifts, let's talk. Call, text, or DM me anytime if you want to strategize for your specific neighborhood. Grab some of my free home buyer and home seller reports. All right, thanks for watching. Make sure you like and subscribe, and see you in the next one.